In this third video, we're going to be discussing cash dividends. We know that a dividend is a distribution of cash to the stockholders. It's paid out of retained earnings and decreases retained earnings. It is declared or not declared by the board of directors who come up with the company's dividend policy. A dividend only becomes a liability when declared. So in other words, corporations do not have to pay out dividends. Frequently, cash is not paid out because it's going to be reinvested in the corporation. It's important to remember that a dividend is not an expense. It's considered a distribution of the company's profits to its owners. 3 dates are important for cash dividends: the declaration date, the record date, and the payment date. We're going to be looking at the journal entries that are made on the declaration date and payment date. There is no entry made on the record date. The record date just signifies which stockholders of record will receive the dividend. So we're going back here to Georgios Company, and on December 15th of 2023, the board of directors of Georgios declares a 50-cent per share dividend to stockholders of record on December 29th. The dividend will be paid on January 9th of 2024. In this case, our declaration date is December 15th, 2023. That is the date on which the board of directors declares the dividend and the date on which it becomes a liability. So we're going to need to make a journal entry to bring that liability onto the books. The second date is the record date, which here is December 29th of 2023, and that is the date that determines which stockholders of record are going to receive the dividend. Many companies have actively traded stocks, and the stocks can change hands on a day-to-day basis. So we have to specify a record date to say that anybody who owns the stock at the end of the day on December 29, 2023 is who's going to get the dividend, even if they're no longer holding the shares. And then the payment date is the date on which the dividend is actually paid out as a cash payment to the stockholders of record. So we determined earlier how many shares of stock Georgios has outstanding, and we said it was 8,000. The initial issuance was 1,000. Then we issued an additional 2,000. Then we issued an additional 5,000 for the purchase of the land. So if we have 8,000 shares outstanding, we're going to multiply that times the 50-cent per share dividend and get $4,000. So the total amount of dividends that Georgios is paying out is going to be $4,000. On the declaration date, we want to bring the liability dividends payable onto our books. So on 12/15/2023, our declaration date, we are going to debit retained earnings, decreasing retained earnings for the dividend, and then we're going to bring the liability onto our books, dividends payable, for $4,000. So recall that our declaration date is in 2023, and our payment date in this situation is in 2024, which means that that dividends payable account is going to be on our books at the end of 2023. So it will be reported as a current liability on our December 31, 2023 balance sheet. The record date is 12/29/2023, but no entry needs to be made on the books on that date. On the payment date, January 9th of 2024, we want to take the liability account off our books and pay out the cash. So we have a debit to dividends payable and a credit to cash.